Well, there we go. Another technical issue. Didn't press the button for the unmute. But g'day everyone. It's Alan Andres here. I'm the founder of ZuCoins and ZuCas. This is It's ZuTime, and we are live. And we're actually live where you can now hear me, which is great news. We're going to be sharing some updates. As I said earlier, we're going to be discussing some contentious topics, but it's all about crypto, the thunder from down under. This is where it's going to be all happening in the crypto space. Now, without further ado, it's ZuTime, and this is episode 2. Episode 2 is about crypto values. Now, I'm not here to give professional advice. I'm not here to give any advice, and I won't be doing that. But what I can do is generalize, and what I can do is see how that fits in with where we want ZuCoins in the long term and how it fits in with the future of the crypto space, that sector. So what I thought to do, over the next couple of days, I'll be deep diving into areas of the crypto space that affect ZuCoins and how we see ourselves in the global picture. But before we do that, let's get some generalization about the crypto space and how we look at values in the world today. Now, you may not realize this, but I am actually nearly 60. I know some of you out there think I'm a bit younger, but having said that, let's just put it down that I have been around 40 years of experience, both practical and up front and center in terms of the investment world. And we seem to have a lot of a generational shift where a lot of the younger ones, they think that things can't happen that have already happened in the past. So I want to look at comparing shares on the left-hand side and crypto on the right-hand side to give us an insight as to the value propositions and how I sit with the journey that I've had through a history of mergers and acquisitions, takeovers, litigation, bankruptcies, all those wonderful things that sort of zoom in on the world of finance, I guess, and how that relates to why I have this interest and passion in the crypto space generally, not just because of ZuCoins. So let's start where I say to you there's going to be a massive upheaval in crypto, not just because of where people are focused currently with blockchain and DeFi and networks and all those wonderful things, because there's a bigger picture to be happening here. I think we're at the tip of the iceberg with crypto in a sector that hasn't been talked about. And this is where ZuCoins will fit in. So let's talk about shares and risk. Now, every investment has a risk profile. And the journey that I've been through, obviously a starting point is shares. Now, shares have a whole range of risk profiles, from grassroots mining companies, exploration companies, which is one of the things that I was involved in the 80s, late 80s, through to so-called blue chip stocks. And then you have crypto. And sure, you know, there's risks out there and you know, it's very speculative. We accept that. And we say to ourselves, well, let's not go near crypto because of those risks, and the regulators are concerned, and away we go. And, you know, people would say, well, oh, there's scams. But let me tell you this. There's scams in every single sector that's been going on for centuries, shares included. That's despite all the efforts of the regulators, there are still scams no matter what sector you're part of. So let's create a leveler. We accept that there's scams in all sorts of industries. But then there's the risk profile. I mean, Bernie Madoff, you know, the investments were treated as blue chip, one of the greatest investment profiles you could have. And there was a scam. Now, that had nothing to do with crypto. And there's scams in crypto as well. There's hacking, and there's hacking into shares as well. But I want to centralize this now on shares. So you think about a share. Now, the concept of a company going public has been around for hundreds of years. And initially, it was all about creating access to capital from groups of people that didn't necessarily want to run companies. So next thing, we find that we're going to have this corporate veil that'll shield the shareholders from risk and exposure and liability and allow a group of guys or women to get together and form a board. And they're going to run the operations of the company. And then over time, people got concerned because there were some naughty characters, and you can go back to the great days of the trading era through Hong Kong and those entities back in the 1800s, the 1700s. You know, the great land scandals of Mississippi. The great John Laws, Chancellor of the Exchequer in France, ripping people off. And more regulation came into play. Well, let's protect the investors. And that's a great thing because people don't want to lose their money, but they certainly don't want to have exposure to so-called risk. But there always will be risk. Now, take a mining company. Now, in the late 80s, I was involved with many mining companies, and it's an exciting industry. Highest risk industry, I would suggest to you, on the planet. Why? Because you raise capital and you drill holes. Now, not every hole is going to be successful. So the success rate is very minuscule, but it's hugely speculative. Now, the regulators come out and say, we need to protect those investors in mining companies, so you have a prospectus. Now, they don't check really the good or bad in terms of the prospectus. They rely on third parties to create these prospectuses. And that includes a whole range of people. It includes accountants, lawyers, geologists, analysts, and there's a whole raft of material that's put together for the benefit of the investor to reduce the speculation. Now, as part of that speculation, nobody reads the thing because at the end of the day, you're drilling holes and you hope to hit gold. Now, I can give some advice to a whole range of people that would say to people, what's the best way to counter that sort of information, minimise the cost to the boards to drill holes, and increase the rate of drilling if more money is available? Well, the best way is the regulators could have a star rating system for all stocks and shares. Now, a single star would be high risk, blood up your ass. A 10-star might be government guaranteed treasury bonds. And you look at the front cover and you look at the stars and you say, I'll pick that one, or that one, depending on my appetite for risk. Now, the problem with shares is you then get listed. Now, the listing costs are huge. You can spend millions on lawyers, millions on accountants, millions on geologists. You could have the greatest ground on earth next to the best prospective tenement and hit nothing and still lose your money. Now, even when you're listing on share markets, guess what? You can still lose your money because there's external factors that affect the impact of the company. Now, they're all trying to make a reward to you as a shareholder through increase in share price or increase in dividends. Pretty simple. The trouble is the balance sheets and P&Ls get sabotaged. Why? Because of external factors, climate change, COVID, businesses not making sales, shutdowns. And every generation will see this. Now, in the 80s, I saw share prices go in one stock, Forsyth, for example, from 3 cents a share to $6.90. And we rode it all the way. Now, next thing, we had a tax problem. And then along came the external factor, which affected the share markets. And bang, the 87 crash. Now, they got rid of the tax problem, but there's the risk. Now, why am I highlighting the risks in shares? Because we're going to see a transformation on a scale that the industry hasn't focused on in terms of crypto. Now, at the moment, crypto is all about, well, there's a speculation. We'll buy some Bitcoin. It'll go from X price to X Z price. It's now at $46,000 US, but it's speculative. But you know what the inherent value proposition of Bitcoin is about? Well, I'll tell you. Initially, it's about part of that speculation and part of that store of value. But it's really about the utility of the use of that crypto and removing the variables that we talk about with shares, for example. Now, you can put a star rating on thousands of cryptos and say that one's a bigger risk than that one because A, the platform's not quite good in terms of Ethereum, or B, we've got problems with the concepts of the smart contracts. And you can analyze those and come up with a scheme that says less risk, more risk. But the difference is huge because the crypto space has removed those human input variables. What do I mean by that? Well, think about it. Pure digital technology that's reliant on computer algorithms. Now, in 2009, in that January, was a watermark, a high watermark for the world in its investment thinking, a change. Now, that change was Bitcoin, but it didn't quite get it because it still relies upon, to a lesser extent, what's in the shares and the share market, but to a greater extent on the way the transactions and value are processed, coming back to the miners. There's still that human computer element that means it's not fully autonomous. It's not completely decentralized away from the risks associated you can see with the share market or shares. Now, Think about it. If you look at a crypto, a digital form in its purest form that can have no human input, there's no board of directors to worry about. There's no transition in boards. There's no board members or CEOs knocking off money. There's no litigation. There's no effect from climate change. There's no effect from COVID. There's no human element in terms of the listing on the exchanges. Now, if a company goes broke and it gets delisted, that's the end of it. Kaput. Gone. But if you had a crypto that was attached to a smart contract that had a guarantee flow of gold royalty, for example, to each of that fraction or amount of crypto, no matter what crypto it is, then that's a contractual right to that entitlement. But if the right falls apart, that is, unlike shares, the company goes broke and gets off the exchange and your shares are gone, you still have your crypto because it's computer driven. There's no human input. There are no boards in Bitcoin. There are no deductions for amortization or depreciation or balance sheet issues. There is no due diligence. There is no requirement for a regulator to constantly update the processes in relation to what the activities are doing. Now, that's a huge breakthrough that I would say to you here and now, that if you think of the ironing out the issues in Bitcoin, and I'm not a great fan of Ethereum because you have the same issues of third-party involvement through proof of stake, that is, groups of people putting up and stumping up the most money in order to process the transaction. If you can get rid of those two problems, proof of work and proof of stake, you have now created the most purest form of digital asset that allows it to run its way through the world financial systems, not just for transaction use, not just because we're going to buy goods and services, but because we're going to change the whole concept that you don't need to rely on other party for the risk profile of your investment. And now this may be, and I would put this on the table today, that my prediction is you won't need stock exchanges. If you create the truly autonomous, permissionless-based, peer-to-peer transfer value. Now, let me say that again. Autonomous, permissionless-based peer-to-peer value. It's not about writing roughshod on currencies or suggesting you're better than the US dollar. This is a whole new dynamic, a dynamic that says people can go along, select the crypto with the attaching rights that come with it, and there may not be any rights, but certainly whatever's attached to it, as a value proposition, and trade it amongst themselves without even exchanges. You don't need an exchange when you are moving transfer digital value. It just gets hijacked. Now, in the next few days, of course, I'm going to make sure that we share all of the hard work that Robert's done, share all the hard work that the team has put together to actually iron out the problems of the first generation of crypto that will allow the next generation to supersede and allow this to occur, where there's a rethinking of risk profile, high risk, low risk in the crypto space. It hasn't happened yet, but it will. And the moment you have peer validation, the moment you put the control back into the masses and the people, then there's your access point for capital to be raised, which allows people to get together and say, listen, I have this crypto and it's entitled to X, Y, and Z. In the gold mining example, it might be a smelter royalty of 2.5% paid every quarter. It could be paid into the accounts of the Perth Mint, which is attached to the crypto. Now, you don't need that business to be listed. The capital is there. They can focus on drilling holes, producing gold, getting up the returns to the crypto holders. Now, isn't that more sensible in the sense that why have a 500-page prospectus full of all of that data that the regulators want you to read, and at the end of the day, you can't rely on anything. It turns into litigation and mud because the geologist will say to you, oh, I did put a qualifier, a disclaimer there that says we are next to a great product or tenement, but we're not sure whether we'll find anything. Or the lawyers, you can have all the legal advice on the planet. You can have the QCs, and I've done this. I have been down the road with the best QCs this country has to offer in my 40-year journey. And at the end of the day, you get the advice, and it is meaningless once you enter a courtroom, because you have a new adjudicator and there's two sides to the story, and he will decide which is his preferred view of what the law would say or shouldn't say. And that's the detriment of shares and companies. For 500 years, we've had this concept that you need to be an investor in an entity that's well outside of your control. Now, you might as well go to the horse races. You think about punters. Now, a horse race happens, 14 horses in a race, and already the odds are there, which is an analysis of the risks of the horses that are running. Now, there's less risks in an environment of a horse race once the horse race gates open than there is in shares in a company. Why do I say that? Because with a horse race, you've got to rely on just the horse, the jockey, and the track, maybe the weather. So you're down to 4 variables. In the company, you have absolutely no idea as to where the next problem is going to occur. Now, some people can say, oh, well, Alan's just talking about high-risk companies. No, I'm not. I've seen companies, Westpac was on its knees in the 80s through a whole raft of fraudulent activities. Now, these companies, these big banks, they've been participants in some of the highest risk strategies, and they don't care, because the super funds, which takes the funds out of your pocket, put investments back into the banks, the governments get involved, there's penalties, and there's a round circular movement of money. I mean, Westpac had 23 million breaches of the Money Laundering Act. And what do? They get a settlement. They write a cheque out for 1.3 billion and walk away. And shareholders say this is wonderful because we've now got the shares are listed and we'll trade them in the hope and expectation of it going up. Now, if you had a crypto in its purest form they talk about, which is the exciting part of digital assets, you don't rely on any board. You don't need the board to make poor decisions. You don't need the board to, let's take another case example. And these are facts. BHP, I can recall $3.9 billion of shareholders' funds written off on a copper project in South America. Now, they just write it off, but that's your money. But there's no talk about the risk profiles of those entities. We all just hope that they regather the troops, get the troops going, and the share price will increase and we'll keep going. Now, in the 80s, we had some blue chip stocks. Bell Group went down the toilet. Way it went. So when I hear and I see people getting worked up about crypto generally, I'm not just talking from ZuTime's perspective, but you take the top leading cryptos. This is a revolution that's happening, but it hasn't touched the surface. We are at the tip of the iceberg. Now, from a ZuTime perspective, we're looking at the way in which that utility works of mass adoption, which is mass market. Now, you think about people buying high-risk crypto. Well, BHP, for example, has about 600,000 shareholders. Now, that's probably topped out. They're not going to get 100 million shareholders. No company on the planet, publicly company listed in any exchange, as far as I'm aware, will ever see numbers that the crypto space can put on board. Now, you think about these big companies. Now, Reliance Power is a very big, powerful company. It's got 3.4 million shareholders. It's topped out. Now, the companies can't even sustain those big numbers because you've got, guess what? Reporting requirements. You've got millions of dollars in legal fees. You've got annual meetings. You've got due diligence that's happening. You've got reporting requirements in terms of every activity updated. Why? Because the regulators want you to be informed of what's happening in the company. You don't need that in crypto. Now, the crypto space unleashes itself to potentially billions of people. There's never going to be a profile of so-called secure investments, even high-risk investments in the share market, that's going to allow the adoption of such big numbers. But it will happen with crypto. Why? Because of the ease of transfer, the ease of access, and if you improve those problems, which is what we say ZuCoins has done, if you get rid of miners and you get rid of stakeholders and you get rid of that third-party influence, there's nothing there other than computer algorithms running the engine day in, day out, 24/7, of which people can adopt and use that crypto beyond the scope of of retaining it for their money. So it's not about just a store of value, and it's all about minimizing the perception of where the big guys see crypto heading. Now, don't get too confused about worrying about the adoption of the networks and all the things that are happening underneath. I mentioned it the other day. It's a bit like no one gives out a concern about how MasterCard or Visa operate their networks and how powerful that is with merchants and connecting with consumers. All we want to know is there's the card, spend the money, and it works. That's what will happen with crypto. Now, beyond that, of course, that puts you into what we're all about, the utility of value proposition to reduce that risk profile. And that's the sort of story I wanted to share today to set the benchmark of distinguishing between the market chatter in terms of risk profile. Oh, well, I've got shares that are secure. Well, have a look at the market today. 292-point drop on Wall Street. The Dow is down. The shares will be down. And you are now completely in the hands of variables beyond your control as an investor. You're up to what the board does. You're governed by external forces that I've described before. You're governed by what the exchange can and can't do. And at the tick of the heartbeat, you might never have your shares listed because they'd be delisted for whatever reason. And it happens. It happened through the 90s. It happened through 2000. It happened in 1890. The centuries of this cycle continues. What we haven't seen is a digital asset that can shield itself from those cycles. And actually, I would say, in my personal opinion, if it's attached to the right attributes that crypto has, in other words, you can readily use it between each other. You can readily buy goods. You can readily attach other value propositions to it. That's going to be the game changer. And as I said earlier, mark my word, once word is out that people can raise capital and have an asset that continues infinitely based on the computerization and digitization, that'll be the game changer. Because those people can go and dig holes, they can drill, they can find gold, they can do whatever they like. They don't need to spend $1 million with the lawyer. They don't need to spend money with the geologist. They don't need to do all these things that regulators require to try and give you comfort in material that 90% of the people don't read. Now, what I'm going to share is that's the format that why we want and can see the value long-term, and the analysis that I've done, personal analysis of where this is going to head over the next many, many months, many years, and how big that's going to change everybody's perception. Now, just in closing, just make sure that you understand, I don't care what the investments are. The reality is there's scams in every sector, every business. I'm here up front and center. ZuCoins is not a scam. It is 20 years of hard work, 20 years of big money that's been put in to perfect what we see as an industry in the crypto space. So when you think about ZuCoins, I would take the time for people to actually look at the technology. And when you go back and you say that you can send BTC and you can do all these functions and all the rest of it, sure you can. I've never denied that. I would invite people to look at the comparison between Bitcoin and ZuCoin, because there are flaws in Bitcoin and there are flaws in ZuCoin. And this goes back to getting people's perceptions beyond when someone comes out with the first round. I mean, Bitcoin was a joke when it started in January 2009. It was considered a scam. Now, all of a sudden, it's gained adoption, it's gained traction, it's become real, and suddenly it's fallen outside of the scam area. The scam's occurring because people are trying to get hold of Bitcoins through other dastardly means. Now, what Bitcoin can't do is it can't remove the structure of its blockchain. That blockchain is there forever and a day. It needs miners to process a transaction. Now, let's just say, as you know, miners want to be paid. Nobody in that industry works for nothing. You don't turn a computer on that costs thousands of dollars of electricity to earn nothing. You don't turn it on to earn a $10 fee to earn basically what MasterCard and Visa are getting percentages on their transactions from merchants. Now, if they run out of coins and the market gets reset for the miners, let's just put a hypothetical. When all the Bitcoins are mined, however long that'll take, and the fees are so low, and the miners decide that I don't like this industry because I'm not making any money, or I'm going to look to the developers to create another fork. So there's a variable in Bitcoin. It's not hard and fast fixed in the direction it's going. We've already had a couple of forks. I mean, that's why we've got Bitcoin Cash and you've got Bitcoin Gold. People don't realize that. Now, if that happens, it's possible that you may never be able to transfer your Bitcoin because there's no miner there. Think about it. You're going to get trapped in a crypto product where there is no miner. So the answer to that is step back, look at the technology, look at new technology, and is there a way that the peers themselves who are on or offline can actually validate the transaction 24/7 without input of any third party? That's all ZuCoins is doing. That's the ultimate achievement of ZuCoins, to put that back into the power of that back into the hands of the peers. Once you've achieved that, which we've done, and you'll see that now coming, there is no third party involvement. If that product continues now in terms of expansion, then that's where you then want utility, you want mass adoption through a whole range of other areas that come into play. And that's the topic we'll be talking about, because I'm not concerned about the technology. The technology is absolutely sensational. Split lock and split chain is patented technology on data fragmentation that reduces the effect of data that's required in order for processing transactions. And that's the key. That is the secret sauce of ZuCoins. Fractional data means there's less load to carry, which means you don't need to continually grow the blockchain lengthwise, thickwise, and replicating it multiple times simply to process a transaction through an algorithm. Now that you've got that, you have no transaction fees, zero. If you have no transaction fees, that means we can certainly make it big time for other usages. Now, people go on about, oh, look, you know, we're currently doing some Bitcoin transactions and there's no fee. Well, someone's absorbing that fee. That's the reality of it. Now, you know, it's fast. Why? Because Lightning has come along. Now, Lightning is an aggregator of transactions. All they're doing is saying, instead of processing one transaction through Bitcoin or Ethereum, I've done the Ethereum. We work with Ethereum, we work with Bitcoin, and we get the fees directly, right? Someone otherwise is absorbing the fee, and they're absorbing the fee because there's other ways to absorb the fees. Foreign currency conversions. You don't even know it's happening. Nothing is for free in the world that we're seeing currently and the way it's designed. Now, Lightning says, okay, we'll aggregate transactions, we put them in a big pot, and we'll push them through to the network, and the miners will still have to validate. They still have to validate the transactions in bulk. So they're trying to create scalability, speed, efficiency, and security. That's the trilemma. That's the problem with the current first generation crypto. Now, we've seen this in the past. It's hard to accept. You know, you can throw all the scams at me and all the rest of it. The reality is the technology speaks for itself. It's globally patented and it has other applications, and it is next generation. This is the next generation crypto that's going to take on the whole concept and thinking of reducing that high risk profile we see with crypto generally. But I cannot express it enough. It doesn't matter what industry you're in. History is littered with all sorts of scams and frauds, hacking in all industry sectors. And we see it all the time. Doesn't matter how powerful the business is, doesn't matter how big the bank is. You know, HSBC, money laundering, 35 billion, drug cartel money, the list goes on and on, but we tend to gloss over it. Well, the time's come, everybody, that there is a new application through digital asset technology, crypto. And I'd like to remind those that are of my age of the old days when we had web crawler and we had all sorts of search engines, and suddenly Google come along and has dominated the profile of that industry sector through new technology. Now, if someone said to you in a presentation that I'm going to cache or copy the entire internet database in order to search engines and replicate that at multiple times, you'd think they're nuts. How could you possibly store billions and billions and billions of data, files, videos, pictures to store so that you get the pleasure of a free search engine? Well, again, it's not free because the model says they've got to get money from somewhere, and they get it from advertisers, billions of dollars. They get it from your profile, your data. Your personal data is their data, which allows them to make money. The crypto space, particularly fragmentation of data that we've created, the split chain, is a different game changer in the sense that you retain the data, you retain the profile, you get to make the money. The coin itself, the ZuCoin, is a means to an end. It'll hold that value. It'll allow you to process at no cost. You know, we don't want to make money out of any transfers and coins. We're making it out of the coin itself. And more importantly, coming back to the shares, 600,000 shareholders in BHP versus potentially hundreds of millions of owners of crypto in one crypto. And that's the supply and demand. And that's where I'll leave it, because over the next couple of days, we're going to deep dive. And we're going to deep dive big time into short-term value versus long-term value proposition. And there's going to be a couple of equations in there. I mean, I really enjoyed my 3-unit maths. I love physics. And that's given me some grounding with my mergers and acquisitions and analysis of balance sheets. And I'll leave you with this thought that in any balance sheet, there's always a high risk. In any company, there's a high risk. I don't care what it is. And I've seen it all. I've seen the markets crash. I've seen people lose their livelihoods and lives through it. And now I can tell you, the great Robert Holmes à Court, you can look him up, one of the great takeover Australian strategists in the late 80s, once said, there's no such thing as a liability on a balance sheet, only opportunities. You either grab the opportunity or you don't. So cheerio, everybody. Look forward tomorrow. Tomorrow's all about short-term analysis of ZuCoin value. Can't wait to see you then. Cheers.